Okay, so distribution. Now, next topic is partnership distribution to the partners. If I talk about the distributions, there are two types of distributions. First is current distribution, second is liquidating distributions. Okay, current distributions means what? The partner is continuing in the business and is taking out the money, means I can say withdrawing the money from the partnership firm. So that is the current distribution. Okay, liquidating distributions means what? If the partnership is getting liquidated, right, and the partnership firm is getting liquidated and the firm is not going to continue the business anymore, then that is called liquidation. And in that liquidation scenario, if the partner is getting the distribution, that is called as liquidating distribution. Okay, so in case of current distribution, we need to check two things: what gain the partner will recognize and what will be the remaining basis. See, he's still continuing in the business, he's still having the share in the partnership firm, the partnership firm is still continuing its business, then whatever is the remaining basis will still be carried forward, right? So current distribution, partnership is distributing money or property. There can be two types of distribution again, money or property. Okay, partner must report his distribution share in his return in the year in which partnership tax years end. Yesterday we saw one thing, like in the previous session we saw that if the partnership firm is following a calendar year, then 31st December is the year, 31st December 22 for example is the date where the tax year is ending for 2022. Okay, so partnership firm will issue K1s on what date? Till 15th of March, right? 23. So in year 2023, the partner will show that distribution in his 1040 return. But partner must report his distributive share in his return in the year in which partnership tax year end. I can't say that I'm receiving distribution in 2022. So I should include it in the 1040 return in year 22. But I should wait for the tax year ending, that is 31st December. So in March, when I'm going to receive the K1s, I'll include it in the 2023 in which I'm receiving the K1s. Okay. So next is how we are going to calculate the gain, whether the partner should recognize gain or not, and what should be the basis, how we will calculate it. For that, we'll just directly take the partner's adjusted basis, right? See, he is continuing partner, he is still there as a partner in the partnership firm. So whatever is his basis in the partnership firm, we'll take it, we'll reduce the money what the partner is receiving, we'll just reduce it. Or if the partner is receiving the property, we'll reduce the adjusted basis of that property which the partner is receiving. Okay, we'll reduce these two things if he is receiving both. Whatever is the amount after reducing the distribution, if it's a positive, then this will be, but obvious, the adjusted basis of the partner in the partnership firm. All right, if it's a negative, see, if this amount is negative, means what? The partner is getting distribution which is more than his adjusted basis. More than his adjusted basis. If you're receiving the distribution, is receiving the money, means the amount will go in negative. Then only the amount which is negative, the partner will consider it as a capital gain. Excess will be recognized as a capital gain for the partner. In his 1040 return, he will recognize it as a capital gain. And what will be his basis? See, I said initially the basis cannot be 0. The basis will be 0. Basis cannot be negative, that's why it should be 0. Got it? Now, what if the distribution is liquidating distribution? Means the partner is taking out the whole share, he is liquidating his share. Then in that case, we'll just do one calculation, that is whether he need to recognize loss or he need to recognize gain. Okay, we'll look it further in upcoming examples. Second thing is partner's basis for distributed property. See, we saw here what will be the gain, what will be the remaining basis, and whatever distribution is receiving by way of property, Okay, so this property at what amount he will recognize? Let's see that as well. For partner, adjusted basis of interest, right? Whatever is the adjusted basis, we will reduce the money which the partner is receiving in that transaction. See, partnership firm is showing some basis of that partner. Okay, I am talking about current distribution right now. So whatever is the adjusted basis minus money received for the same transaction, this there will be an amount. Okay, if it's a positive, then this will be your basis. This will be your basis in the distributed property. Got it? If it's a negative, the partner will recognize capital gain, but obvious, whatever is the negative amount, that will be your capital gain amount. The basis of the property will be 0, and the basis of the your interest, partnership interest in the firm will also be 0. Got it? These are also the 3 scenarios in case of distribution of the property. Now let's talk about from the point of view of partnership firm. For partnership firm, basis will be adjusted basis to the partnership immediately before the distribution. Okay, for partnership firm, whatever the firm is distributing to the partner, the basis of that property will be the basis immediately before the distribution, means cost minus depreciation plus any improvements, right? Plus and minus, so that will be the adjusted basis just before the distribution. Okay, partners basis for distributed property. This was about it. Let's look at the example. Suppose the adjusted basis of interest is 10,000. My adjusted basis in the firm is 10,000. I am receiving cash of 4,000. I am also receiving other property which is having adjusted basis of 8,000 from the partnership firm. So will I recognize gain or loss, or what will be the amount of the property? See, for partnership firm, the adjusted basis is 8,000. For me, how much should I record in my books? So adjusted basis of interest, that is 10K. Just remember the formula we did right now only. See this one. Adjusted basis of partner, here it is 10,000. Okay, minus whatever cash we are receiving, that is 4,000. Okay, this amount 6,000, we'll compare it with the adjusted basis of property, that is 8,000, and whichever is lower, we will take 6,000 as a partner's adjusted basis. Got it? See, if you apply this in this formula also, then also you will get it. Partner's adjusted basis, how much is the partner's adjusted basis in our example? It's 10,000. Minus money, how much money the partner is receiving? It's 4,000, right? 4,000. So it's 6,000. So in the next example, if you can see, adjusted basis of interest minus money received for the same transaction. So we'll just reduce it. So we got 6,000. So this is positive figure. So maximum basis of property will be this 6,000. Property will have maximum basis 6,000. But actual FMV of the property is how much? We have the actual FMV of the property. FMV we are not having. Okay. Adjusted basis of the property is 8,000. So we can't take 8,000, but we'll just take simply 6,000. Okay, adjusted basis of property for the firm. We'll compare it with 8,000. Whichever is the lower will be the basis, adjusted basis of partnership interest, and also I will consider it as adjusted basis of property. Will I recognize any gain? No, because it's not a negative figure. If it would have been negative, then only I'll recognize it as a gain in my box. Got it? So this was about the current distribution which we have talked so far. Let's look at the liquidating distribution. What happens if I'm liquidating my interest into the partnership firm? I'm taking out all the, I'm closing my all the interest in the partnership firm. What I'll do, I'll recognize loss. How come the loss will come? Whatever is your adjusted basis in the firm, against that I'm receiving X amount, or I'm receiving, property. I'm receiving a property, okay, or any money, or any property. If this money or this adjusted basis of this property is less than my interest in the firm, see, I have contributed say $1 lakh, and every year I'm receiving some income, so that income will be added to the basis. We'll just look now how the adjusted basis. See, you might get confused about adjusted basis. We'll just have a look that how we are going to calculate the adjusted basis. Okay, whatever is my adjusted basis on the date of liquidation, I'll see what I'm going to receive. If I am receiving money and property or adjusted basis of the property, I'll compare it with whatever is my contribution, whatever is my interest in the partnership firm. If I'm receiving less amount of money, less amount of property, lesser amount as compared to my basis, then it will be a loss for me. Got it? Then it will be a loss for me. Because I know I have contributed 1 lakh, but against which I'm just receiving 50k. So remaining 50k I am not going to get it. So remaining 50k will be my loss. This is what called as liquidating distribution. This loss the partner can recognize, right? But only if this distribution, this kind of distribution meets all the following requirements. Remember the term all. It should meet all the following requirements. Okay, first is adjusted basis of partnership interest, means this is more than the distribution. Right now I have explained that, right? Whatever is your adjusted basis, say 1 lakh, against which you are just receiving a distribution of 50k. So 1 lakh is higher than 50k. Okay, if your distribution is less, I can say, or I can say adjusted basis is more than the distributions. First case is this. Second, the partner's entire interest is liquidated. Not only like 20% or 80%, or the entire interest he is liquidating into the partnership firm. Third thing, and the most important, is distribution consists only of money, unrealized receivables, and unrealized inventory. Okay, in the form of money, you are receiving, see, you can receive a distribution by way of money, like cash, I can say, by way of property as well, by way of unrealized receivable, by way of unrealized inventory. Okay, if you receive a distribution in this form, don't consider property, but if these three things are there, then only the loss will be recognized. Now, what do you mean by unrealized receivable and unrealized inventory? I have given a chart over here at this starting, if you can go over to this page. Okay, unrealized receivable, unrealized inventory means what? If you are a cash basis, if the partner is using a cash basis, right, then what do you mean by cash basis? As and when the goods are sold and the money is realized and the money is recovered from the customer, then only you are going to record it. So unless and until it will be unrealized receivable. So in cash basis there will be unrealized receivable, yes. If it's an accrual basis, will that be unrealized receivable? No, because as and when we are going to sell the goods, we are going to record it in our books of accounts, right, as a receivable. So basically we have included that sales in our books before receiving the money. So there's no unrealized receivable. There's no unrealized amount that is going to be there in case of accrual basis taxpayer. Got it? So that is called as unrealized receivable. If it's an inventory, so inventory, I don't need to explain you guys. You already know what do you mean by inventory. Whatever is there in your stock, right? That will be your inventory. Property included in the partnership. See, what does inventory includes? Property. What kind of property included in the partnership? Inventory. If on hand or held primarily for sale. See, you are keeping that stock, keeping that inventory, and someday it is going to be sold to the customer. right? Primarily going to be sold to the customer. It is there for sales. If it is sold or exchanged by the partnership, which is not a capital asset or section 1231 property. What do you mean by 1231 property? 1231 property is something which is called as an asset. Using that asset, we are generating the income. So it is not for sales. Like machinery, plant and machinery, I can't call it as an inventory, right? It's 1231 property means it's a capital asset which is used in my business for generating the income. Okay, so that is not my inventory. That is the purely a fixed asset, I can call. If property held by the partner, right, selling the partnership interest or receiving the distribution. If property is held by the partner, I can't call it as inventory, right? Next, there is one term that is called a substantial appreciation in the inventory. What do you mean by substantial appreciation? If the FMV is more than 120% of the existed basis, then we can call it as the inventory is substantially appreciated, right? It might happen that my inventory's cost is 100, say $100, right? Now, after the time passed, it increased its value and it is now at $200. So the inventory is substantially appreciated, I can say. Okay. So this was about unrealized receivable and unrealized inventory. How we are going to use it? In case of liquidating distribution, remember this thing, you're liquidating your interest in the partnership firm. How you're going to use it? At that time, whatever is your adjusted basis, right? Adjusted basis at the time of liquidation, you will have to distribute it into different charts. I'll just explain you into different categories. For example, your adjusted basis is 1 lakh. This 1 lakh, first you will distribute it to unrealized receivable, unrealized inventory. The amount will be given to you. We'll look at the example just right after this concept. First, just understand the concept. We'll first distribute it amongst unrealized receivable, unrealized inventory. Okay, whatever is the amount we are going to distribute will be the amount is equals to adjusted basis of the part. For partnership firm, see in question what they will give you a balance sheet. In balance sheet, or they will give you just the figures that this is the amount of unrealized receivable, this is the amount of unrealized inventory. They'll give you two figures, what adjusted basis and FMV of that particular property. They'll give you fixed asset, they'll give you cash, they'll give you unrealized receivable, unrealized inventory. Okay, they'll give you adjusted basis also and FMV also. So first of all, just take the adjusted basis of those two things, that is unrealized receivable, unrealized inventory, and bifurcate from this 1 lakh, bifurcate that amount to this two. All right. Second is unappreciated amount. What do you mean by unappreciated? Means if my adjusted basis is say adjusted basis is say 50,000, but the FMV is 60,000, I can sell that particular property asset for 60,000. So my 10,000, the excess 10,000 which are going to recover from the from the market, that is my unappreciated amount. Got it? Whatever is the remaining from this 1 lakh, we have distributed this to. Whatever is the amount remaining, we'll just allocate this amongst other assets, right? Adjusted basis in the partnership, in the ratio of adjusted basis in the partnership. Mark my word, it is adjusted basis and not the FMV. Got it? So now just understand, out of this 1 lakh, I have allocated to the first part, that is unrealized receivable, unrealized inventory. Here also cash will also come. And the cash. Second, unappreciated amount I have allocated. Whatever is the remaining, it can either be negative, it can either be positive. So remaining amount, if the remaining amount is more than my adjusted basis in partnership, remaining amount is more, means it is remaining, right? So allocate the remaining amount in adjusted basis of the property in the partnership. And if still, after allocating this, if still there is something remaining, I will allocate it in FMV. First, I'll take adjusted basis only. If there is still anything remaining, I'll distribute it in the value of FMV, right? Second is if the remaining amount is up to the adjusted basis. What I'll do, see, adjusted basis is not enough to recover it. I'll just reduce the adjusted basis to match up the remaining amount. How we'll do it? Let's take one example. Okay, let's take one example. For example, E is having a basis in the partnership of 55,000. He is liquidating his interest and he receives property A and B. Property A is having FMV of 40K, B is having FMV of 10K. The adjusted basis is 5,000 and 10,000. So in first property, that is A, I can say there is an unappreciated amount of 35,000. Adjusted basis is 5 and FMV is 40. So 35,000 is my unappreciated amount. For B, there is nothing unappreciated. Whatever is the adjusted basis, I'm going to get the FMV is also the same. So there is no unappreciated amount. What I'll do, I'll take this 55,000. First, I'll allocate it to the adjusted basis of property. That is 5 and 10. So out of this 55, 5 and 10 I've allocated to the adjusted basis of the property. Okay. Then what I'll do, I'll take the unappreciated amount, that was 35,000. I'll allocate the next amount to the unappreciated amount. Whatever is the remaining, now remaining is 5,000. Whatever is the remaining amount, I'll distribute it in the ratio of FMV. Got it? Because this is 5,000, which is less than 50K. See, if it would have been here, unrealized receivable and inventory example is not taken. It is in the upcoming, this example will take and understand that unrealized receivable and inventory. This was just example of this part. Okay. It was just an example of this part. Got it? Whatever is the remaining amount, first we'll distribute it amongst the adjusted basis of the property. Then we'll take, then what we'll do, we'll take the unappreciated amount, and then whatever is the remaining, we'll distribute amongst FMV ratio. Got it? Now, how they can ask what is the basis of A property? See, he's receiving A and B. So what will be the basis of A property? Just add it. A is 5,000 plus 35 and plus 4. So it will be 44,000 in the books of partner, right? Partner is receiving this property now. So what amount he'll record it in his books will be total of all three. Okay. Now let's take the other example, which is having inventory, which is having cash. Okay. So what it will be? For example, if the partner is having adjusted basis of 1,50,000, now you have to distribute this 1,50,000 amongst this all property. Now there is one step which you need to follow. There is a stepwise manner how you are going to distribute this 1,50,000 amongst the cash, amongst unrealized inventory, unrealized receivable, and then we'll move to the adjusted basis of the property, and if there is any remaining, we'll see whether it should be distributed amongst the FMV of the property or not. Got it? So let's see if the partner gets cash, building, computer and inventory. The adjusted basis, see here it should be partnership firm. The partnership firm is having adjusted basis for say building, it's 80,000, right? And its FMV is 90,000. So I can say there is an unappreciated amount of 10,000. Same way computer is there having the adjusted basis of 20,000 and FMV of 10,000. So I can say there is a depreciated amount of 10,000. So whatever is the appreciated amount or depreciated amount, you will take both into consideration. Okay. So first let's allocate the 1,50,000. Here the second method is followed, but I'll just take a simple method which is easy to remember. Just take the adjusted basis. First of all, we'll allocate it amongst cash and inventory, right? What is your cash? Cash is 30K. Here we'll take adjusted basis. Now remember the cash, unrealized receivable, unrealized inventory. We'll take the adjusted basis. Cash and inventory is 70K. All right. So it will be 1 lakh. So out of 1 lakh 50, we have allocated the 1 lakh. Now what we'll do, is there any unappreciated or depreciated amount? Yes. There is 10k of unappreciated. So we'll just allocate the next 10k to building. Okay. Depreciated amount. So 10k is again depreciated. So we'll reduce 10k. So again on hand, we have remaining 50,000. So this 50,000 we need to allocate amongst building and amongst computer. First, we will allocate it in the ratio of directly to the adjusted basis. So adjusted basis, the total of adjusted basis is 1 lakh, which is not enough. The 50k is not enough for 1 lakh. So what we will do, we'll directly distribute in the ratio of FMV of the building and the computer, that is 9:1. Right? If we distribute the 50k in the ratio of 9:1, we'll have this amount, 44,445 and 5,556. Okay, got it? This is the easiest way to remember. Just allocate the 1 lakh 50 amongst the cash, unrealized inventory, unrealized receivable. Whatever is the amount remaining, just check whether there is appreciation in any other asset or depreciation. You don't need to consider depreciation for the cash, for the inventory, or for unrealized receivable. Okay, we'll just check appreciation, depreciation for the fixed asset which we are receiving. So just consider that and take it as a second step. Whatever is the remaining, is it enough to allocate directly to the adjusted basis? See, adjusted basis is 1 lakh in our case. So no, it is not enough. What we'll do, we'll directly go and allocate it amongst the ratio of FMV. If it is enough, say for example, instead of 1 lakh 50 here, instead of 50, if here the remaining amount is 1 lakh 50, then what you will do, first you will allocate 80 and 20, right? 80k, 20k. And again for the 50k, we'll divide it in the ratio of FMV. Okay. So whatever is your adjusted basis, first you will see whether the 50k is enough to distribute it or not. Okay. And then whatever is the remaining, you will distribute in the ratio of FM. So this is the most important sum, I can say. Just refer this sum and keep it in your mind. Whenever there is a question in the exam, just make this kind of chart, right? Distribute the amounts and then answer the question. This will be very easy and less time consuming for you guys in the exam. Okay. So see here the second method. This is the second method. What is the second method actually? But it is a bit confusing. But still I'll show you that how, what is the other way to calculate. 1,50,000 out of this, first method is the same, that is cash and inventory. Will allocate that amount from the 1,50,000 to cash and inventory. Okay. Whatever is the remaining, what we'll do is, if there is a reduction, first we will take that into account. So 10,000 is the reduction. We'll reduce the basis of computer by depletion amount. Means this is our depletion, I can say. My computer amount is 20k, but if I sell it in the market, it will be a 10k. Same way, it's a vehicle. Or whatever are the depreciated amount, depleted amount, right? We'll just check whether there is a depreciation or not. First, we'll take that into account. Take that depletion amount and distribute it amongst the adjusted basis of property. For building, what is the adjusted basis? 80,000. For computer, what will be the adjusted basis? It is written over here as 20k, but if I apply the FMV, see whichever is lower from this two, you have to take into consideration. That is 10k. So in the ratio of 8:1, first you will distribute the depletion amount, that is 10,000. Okay. So building will be 889, computer will be 1112. So now out of this 50,000, the 10k has been allocated for the distribution. Whatever is the remaining, that is 40k, bifurcate in the ratio of again 8:1. Again, we'll bifurcate the remaining into 8:1. So building will be 35,556 and computer will be 4,444. Then what they did, add up this amount. Building 889 plus 35,556, it will be 44,445. Answer will be same whether you do it in this manner or you do it in a very simplified manner. Very simple manner. I'll suggest just remember a simple manner. Take the adjusted basis, first distribute it amongst the cash, unrealized receivable, unrealized inventory. If you want, you can just note it down, the second method over here, which is very easy, and I want you guys to follow this only in the exam. Second, you will allocate appreciation or depreciation directly. Then third, whatever is the remaining, you will allocate it amongst the ratio of allocation in the basis of FMB. And this will be your answer, which you need to select in the MCQ. That's it. Don't need, if you want to follow this method, then also it's fine. If you want to follow this method, then also it's fine. Both way the answer will be same. All right. So this was about the distribution. Distribution is done. One thing I want to cover was the basis. So see, this is very self-explanatory topic. Don't want to waste much time in this topic, but just for those who are directly going through the summary lecture, not taken any lectures, for them I'm just going through this topic. What is the basis? Outside basis means what I told you. Outside basis, if it's the balance sheet T format, here are the liability. For partnership firm, this is the outsiders, this is the insiders assets, right? So whatever is the outside basis is equals to partners adjusted basis. Now what do you mean by adjusted basis? Now whatever the partner is contributing, in what way the partner can contribute? We had already done that. There are three things: contribution by way of cash, by way of services, and by way of property. So whatever the partner is contributing, that adjusted basis plus share of partnership debt. Now you remember, whenever the mortgage is getting transferred, we'll just add it and reduce this particular share of that partner. Remember the basis. So adding and reducing those things, doing some adjustments, and then receiving and then getting to an amount, that is your adjusted basis. Now you know what is adjusted basis. Just remember this thing. What all thing will increase the basis? What all thing will increase the outside basis? What is outside basis? Again, guys, I'm repeating myself. Whatever is the partner's interest in the firm is the outside basis, right? Remember the T format. These are the outsider, these are the insider, I can say. Okay, so we'll increase the amount by way of additional contribution. If I'm contributing something in the firm, then I'll just increase it, right? I'll increase that amount by way of distribution, which I am getting by way of distributive share. If the partnership firm is earning income, obviously I'm going to get a share into that income. That's why I'm a partner for a particular share. So that particular share, I'll add it. So increase by additional contribution, increase by distributive share. I'll increase by partners distributive share of excess in deduction for depletion over the basis of the property. What do you mean by excess? Excess for deduction for depletion over the basis of the property. If adjusted basis minus depreciation, there we get excess depletion. If there's an excess depletion and if the amount goes in the negative, the partner will get it. So don't stress out on this topic. Just remember basic things, that we'll just add on all the additional contribution, add on the distributive share, and reduce. What things we are going to reduce? This is important. Distribution. If I'm getting any distribution from the partnership firm by way of money, then I'll just reduce the money. Adjusted basis, I'll reduce the adjusted basis. This we have already gone through right now, right? Then distributive share of losses or capital loss. If the partnership firm is incurring any capital loss, or if at any time the partnership firm has incurred any loss during the year in the business, that share of loss, I'll reduce it from my basis, right? If the partnership firm is having any expense which is non-deductible, right, and which is not a capital expense, like I can say charitable or any other non-deductible expenses that the partnership firm is going to incur, that I'll reduce it from my basis. Okay, then there's a partner's deduction for depletion. Okay, so this is how you are going to calculate the basis. Take the base amount, initial contribution, we'll just add less these two things, and then we'll receive at an amount which is called as adjusted basis. Now you are aware about the adjusted basis of the partner in the partnership firm. Okay, then there was one more topic. Say I'm not going to cover the basic theory. I'm just here to cover the main topics which we are going to see. Yesterday we look at the definition of related person, right? For partnership, we had a different definition for related person. Just go through this definition. What all things will be covered in the individuals. Mother and fathers are not covered in the individual as a related person definition. Okay, for only partnership. Next is recourse and non-recourse. This is also a small topic. Recourse means what? Any partner or a related person who is having economic risk of loss for that liability, means they will be personally liable for that loss. So that is called as recourse liability. For example, if you take a loan, right? If you take a loan for your vehicle, right? If a car loan is there, and if you don't repay the loan, they have direct authority to recover the car from you guys. So you're personally liable if you're not going to repay it. And over and above that car, if they take the car and they sell it in the market, so if they recover the amount which is less than the loan amount, then they can't do anything. They can't tell you to give more money. See, for example, let's take an example. 1 lakh is there, your loan amount. Okay. Now you paid 2 installments, and from 3rd installment you stop paying it. Means you paid 2 installment. Say for example 10k you paid, and 90k is still outstanding, and you stop repaying it. Now they recover the car. They took the car and sold it in the market. From market they can recover only 80k. So still 10,000 is yet to be recovered, right? So for 10,000, if you are personally liable, if you're not personally liable, means bank can't tell you to pay more 10,000. So this type of loan is called non-recourse. The bank will record 10k as a loss in their books. That's it. But what if for this 10k you are personally liable over and above whatever you are giving, you're personally liable, then this type of loan is called as recourse liability. Okay, so just read it. Any partner or related person who is having an economic risk of loss for the liability. Partner or related person by agreement or by law makes net payment to the creditors or contribution to the partnership. Okay. General partner, I can say. General partner who are the general partners who are liable personally. So for them, I can say it's a recourse liability. Jointly and severally liable, then they are called as they are having a recourse liability. Non-recourse means what? No partner or related person have an economic risk of loss for that liability, then it's a non-recourse. So bank will directly record this 10k as a loss in their books, and they can't come and ask you for the remaining 10k. So non-personally liable means non-recourse. Just remember in that way. Okay, then we have done unrealized receivable inventory. Then we saw that in case of distribution, for current distribution we saw. For liquidating distribution we saw. I'll just revise it once from this. Quickly we'll just revise current distribution and liquidating distributions. Okay, in case of current distribution, first I'm talking about this. Okay, current distribution, adjusted basis of the partnership interest, will reduce it, will compare it by the cash, right? Whatever cash we are receiving, and if this amount is more or if this amount is positive, we'll directly take it as an adjusted basis. See, current distributions means still the partner is having interest in the partnership firm. That's why we are calculating the adjusted basis of the partner in the partnership firm, and that will be the same will be the adjusted basis of the property in the partner for the partnership. If it is less or if it's negative, the adjusted basis will be 0 for both property and for the partnership interest. Second, if property received is having the property received has having basis which is more than the interest, the excess will not be taxable, but the partner will have the adjusted basis equals to maximum interest basis. Okay, adjusted basis of the property received plus money received, if both are more, right, then the partner's basis will be in the property will be adjusted basis. Okay, next is liquidation. In liquidation, we just need to follow this chart. Remember this thing, how the basis will be allocated. And if the partner is receiving higher amount, then they will have to, recognize gain as a capital gain, I can say. Adjusted basis plus unappreciated amount plus excess amount in the ratios FMV. This is how you are going to calculate the adjusted basis of the property. Okay. Second is cash and money received. If these two are more than the basis in the partnership, then whatever is the remaining amount, the partner will have to take it as a capital gain. Got it? Next was, we saw just this example. Okay, so the last topic is disposition of the partner's interest. If the partner is selling or exchanging or transferring the partnership interest, then it will either result in a capital gain or a loss. Okay, how will calculate? Whatever is the amount realized plus any liability if relieved. For example, I was having a particular liability in the partnership firm. I'll add that liability amount in whatever is the amount I'm receiving cash. For example, I'm disposing my, interest in the partnership firm to someone else, and that person is paying me a money, cash, right? So I'll take that cash. I'll add the liability which I was having in the partnership firm, because basically I'm transferring that liability to that person. So that is my benefit. So cash, whatever I'm receiving, plus liability, whatever I'm transferring to that other person. I'll take that. I'll just reduce the adjusted basis of partner's interest in the partnership firm. Whatever was my adjusted basis, I'll just reduce it. Okay. If there is an amount, okay, which is positive, right, then it will be a gain. Got it? Means I'm disposing my interest at a higher amount as compared to my adjusted basis. Just remember, in this manner, I'm disposing my interest for cash, and whatever liability I'm transferring it, I'll just add it minus whatever is my adjusted basis. If it's a positive, it will directly be a gain for me. Let's look at the example. For example, K has a contributed cash when he joined the partnership firm for 10,000. He has contributed 10,000 cash. Now, as on the date of selling the interest, he is having a partnership interest of 20,000. Adjusted basis is 20,000. Out of this 20,000, 15K is just the partnership liability. Now, what is doing is selling the interest for 10,000. How will calculate? He is receiving cash for 10K. Plus, what is the partnership liability? It's 15K. So, 25K. Against this 25K, his basis was 20K only. So, we'll just reduce 20K. So, 5K is my gain. I can say C. Partner will recognize 5,000 as a gain. Got it? Instead of this 20,000, if I'm having a basis as 0, if my adjusted basis is 0, then what I'll do? For me, how much will be the gain or the loss? For me, I'll just see whatever is my liability, that is 15K, right? I'll reduce 0 because my adjusted basis is 0. So whole 15K will be my gain. Understood? This was the first scenario, if it's a sale or exchange or other transfer. Next scenario is payment to the partner for unrealized receivable, unrealized inventory. Okay. Partner is giving up his partnership interest against which he is going to receive a money or a property. So the share of partnership, unrealized receivable or inventory will result in ordinary income and loss. See, here it was a capital gain, but up to this amount, he will recognize it as an ordinary income. Got it? Treat this amount as a partner receives for sale or exchange of property, not capital asset. Only whatever was money or property which is going to receive, just consider the unrealized receivable, unrealized inventory and money into consideration, and then that amount will be considered as an ordinary income and not as a capital gain. Got it? Let's take one example. Let's say my adjusted basis is 0. I'm not having any basis in the partnership form. Okay. Potential ordinary income is 5,000. Now I have sold the interest for 10K. So out of this 10K, whatever was 5,000, I'll consider it as a ordinary income. Potential ordinary income means, let's say 5K is my unrealized receivable or unrealized inventory, I can say. Okay, potential ordinary income means unrealized inventory I'm receiving which is having value of 5,000. So out of this 10,000, 5,000 will be considered as a ordinary income. The remaining 5,000 will be the capital gain. So this was second scenario. Third scenario is in case of death. The partner is retiring or if there is a death. If the payment is made in the liquidation in exchange of his current interest of partnership, this will not be considered as a distributive share or not a guaranteed payment, but it will be directly considered as a distribution. We will consider, see, liquidation of the partner is happening due to retirement or death, then whatever amount we are distributing, it will be considered as a distribution and not a guaranteed payment and not as a exchange for any interest. Not made in exchange for interest but for income is a distributive share or guaranteed payment. If it is not made in exchange for interest but for income, then it will be called as a distributive share. Well, at that time, in this case, what partner will do? Partner will recognize gain or will recognize loss. How much gain you will recognize? Whatever is the amount distributed minus adjusted basis in the partnership, right? Whatever is getting the distribution will just basically generally reduce the adjusted basis. Whatever is the gain, that will be the capital gain. Okay. Next is how much will recognize the loss. See, it might happen that maybe a loss. So only and only money, unrealized receivable, unrealized inventory, only that will be recognized as a loss. Adjusted basis in the partnership minus unrealized receivable, unrealized inventory and money received. Whatever is the amount, that we will recognize as the ordinary loss, not as a capital loss. Okay, ordinary loss. Only these three things, so this is very important. These three things you'll have to consider. Got it? So there are some examples. You can just quickly go through those examples. These examples we have already done. Okay, that how much will be the, see, the first important example was this. Don't go in exam without seeing this example. Second important example in case of disposition is this one. This two example, don't go in exam without seeing this example. For example, A sells 50% of partnership interest for 5,000 cash. He's selling it for 5,000. The basis is 3,500. Okay. And along with that, right, he is going to receive inventory and current assets. The basis of the inventory is 6,000, FMV is 8K. Basis of the current asset is 2,000, FMV is 1,000. So here you can see clearly there is an appreciation of 2,000, but the partnership interest is, which is selling, is just 50%. So appreciated amount into his share 50%. So it will be 1,000 will be the ordinary gain. So total gain in the sales value is how much? 5,000 cash minus 3,500, which is the basis. So out of this 1,500, the 1,000 will be my ordinary and the remaining 500 will be my capital gain. Got it? Second example, Susan is having 25% interest, which is she is going to sell. Adjusted basis is 40,000, sells the interest for 53,000. Adjusted basis is 40, selling for 53. So obviously there's a gain of 13,000. Now here's there's a trick. Along with that, she is going to receive the cash, unrealized receivable, inventory, fixed assets. So this type of question will be asked. They'll just give you the table. They'll just give you the basic information. You just have to calculate what will be the ordinary gain and what will be the capital gain or capital loss. So for example, cash is having the base of 60,000, unrealized receivable is having the FMV of 32,000. Here unrealized inventory is having basis of 40 but FMV of 80. So here there is a clearly appreciation of 40K. Here it's 32K and here we will take directly at 60,000. Fixed asset is having 60,000 as basis but FMV is 40. So I can say that it is a depreciated amount of 20,000. So depletion of 20,000 will take, multiply by Susan's share, that is 25%. So 5,000 is a depletion amount. So out of this 13,000, I'll add the depletion. So depletion is added basically in the gain amount. Whatever is the 18,000, right? I'll compare it with all these three amounts into the Susan's share and see whether it's higher or lesser, right? This amount is higher as compared to the gain. So what we'll do, up to this amount, up to the 18,000, we'll consider it as a capital gain, okay? And 18,000 minus 13,000 of gain, whatever is the remaining will be the capital loss. Got it, guys? This is also an important example, just go through it. See, whatever examples I have included, they are just relevant examples. I have not included each and every examples in each and every MCQs. MCQs, you are anyhow going to solve it on your way. But these examples are those which will help you to understand the concept. All right. So that's it for the partnership. Here I have given one summary. Just go through it. I've included some more examples in this summary as well. And go it in the stepwise manner. See, last day before the exam, just for the partnership chapter, you can just read these pages, this last five pages, 94, 95, 96, 97, 98. Okay. So that's it for the partnership chapter. In next session, we'll start with the corporations.